All right, traders, welcome to today's recap. This is Christian from TTG Market Recap, and today is Tuesday, July 12th. So we'll this video will be a little bit shorter than yesterday's, which was a little bit too long. So I want to get right to the price action and some of the market action, some of the excuse me, the price action and some of the main market action for today. So first of all, theme of the day, markets seem to be jittery ahead of the CPI data. Plus we also had, this warning or this information about ServiceNow, which kind of crushed a lot of the software names today. So I thought that was particularly notable. We'll talk just a quick minute about that, but let me give you the risk disclaimer first. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're talking about is strictly for education purposes. So where do we finish for the day? S&P, kind of all over the place today, down 80, almost, I was gonna say 80, 90 basis points, almost 1%. The Qs were down 1%. They sold off pretty decently from the open. Remember that they kind of rallied into the open. So I'll cover that chart in just a second. IWM, really not much going on there today, down 30 basis points. Bonds, they did rally today. They had a big bond auction today too. Again, these markets are just, seem to be very complicated on a day-to-day basis, right? Bonds had a nice lift today, but there was a 10-year auction that had less demand, right? And bonds kind of sold off from the highs of the day. That also made the equity market a bit bumpy. All right, let's review some of that. Okay, so let's go to the Qs chart, right? Because there's some levels that we talked about yesterday. So here's what happened today. Again, you have to laugh at some of this stuff, but a decent move in the first 10 minutes, and then completely kind of squashed there in the next half hour of the day, right? A little bit, some fight back and kind of a boring market till about 1 o'clock. And that was the bond auction, right? So let's stop there for a minute, right? And let's talk about the bond auction. The only thing that I really want to mention here is that I've talked about this. I talk about this to Tribeca Trade Group members all the time, but in my opinion, you have to kind of know what bonds are doing, right? On it, like this should be like if you have like multiple screens and multiple, or one screen that has different, different things like the S&P and NASDAQ on it, major indices, right? Bonds should be a part of those too. You could either use TLT or you could use the 30-year bond futures, which is ZB, which is what I have. But the reason being is because what happened, first of all, the bond market is a bigger market than equities. And what happens in the bond market often carries over to what equities are doing. And that's been the story all year long, right? As interest rates have gone higher, it's a headwind, right? We also talk a lot about the dollar. I'm not going to talk too much about the dollar today, just because it'll be a longer video. But yes, we want to see bond prices go higher here. It will take the pressure. It's one of the factors, not the only factor that will take off some pressure to equities. So here we are going along, higher all session long, and then right around this 1 o'clock, you could see that bonds started to sell off, and they've been selling off since, right? And they're actually down in the after hours market. So again, not too much demand. Someone said to me on Twitter, which is a reasonable point, maybe the bond auction did not go well because people really don't want to buy a lot of bonds before the inflation data. Could be. I don't know what the reason for that, but I could tell you that there was less demand for that bond auction at 1 o'clock, and that really kind of caused things to move down, right? So that's where bonds are. I think that what we really want to see is we don't want to see a breakdown. So holding the top of the value area, I think would be a good thing, which is 138.17, right? And also above the 50-day moving average. Okay, so that's bonds. Again, I go over bonds just about every one of these videos, right? Let's get back to the 5-minute chart of the S&P, right? We began to kind of leak, right? And get rejected there at the top of value, right? And it just didn't, like, we tried this top of value for 3 times today, right? Again, the value area is based on yesterday's volume at price, so it really represents a good level, both support and resistance, for price kind of trying to do something different, right? Get out of the range, right? We were not able to do that. So we had this sell off. I don't know if this was because people thinking that the CPI report was leaked, or that it's going to remain strong. There was an estimate that was sent out that I saw by a bunch of brokers, right, and talking about what they think is going to be the numbers, right. I think it seems like the consensus is that for the for this number, right, it's going to be right on the screws, 8.8, right? That's what all the analysts say. I don't know if I agree with that. I'm just telling you that's what the expectations, most of them are very close to that, right? So that's what we got. I mean, if the number comes in, generally, again, higher than expected, right, the Fed is going to want to just basically not make any changes to the tone. If they don't make any changes, right, we need something to basically change in this market, right? Tightening, right? The Fed doing this is a big headwind for equities. So at some point, we're looking for the Fed to pivot away from their tightening stance. Okay, that remains to be seen. And the first thing that we need to see change is the inflation data, in my opinion. All right, so that's where we are. What I also thought was notable was, we were talking about this in yesterday's video. We outlined some levels to watch. The 80% rule is, even though it still says 80% rule is labeled up here on my chart, right? We did actually go basically all the way through. Remember, what is the 80% rule? Well, it's when you start a period either above or below the value area and you enter it, there's an 80% chance that price can go all the way through it. So that is basically complete, right? Price went all the way through it. So doesn't mean, so that's a trade setup, right? It doesn't mean that price is going to reverse and go the other way. It just means that that's complete. We've gone through that and fulfilled that rule. All right. So the levels really to watch for tomorrow, right? Depending on what the data is going to be, right? Which will be a driver of that, is whether we're going to basically hold this, this recent move up. So again, it's nice to have levels, right? That's what the value areas do, is especially for the indices, right? They give us a nice roadmap of what I want to be doing with adding risk, taking down risk, being more defensive. And I think if we break 3803, then it's going to be a time to be more defensive in general, right? 3803. Right. So that's the 1 hour chart. And the 1 hour chart can really kind of give us some hints, especially when you have a value area like this. Remember that we started the period, right? We started the month, July, right at the point of control, which I thought was kind of, an interesting way to start the month. We've tried to go a little bit higher. We haven't really been able to we have not been able to take out last week's highs. And we're sitting back basically where we started the month, right? Which brings this up to be like, I was making a joke on Twitter because I like to joke around, especially finance trading can be very dry, looking at screens, doing scans. It could be very dry during the day. When I was an institutional trader, right? We used to, work our, what off. But at the end of the day and during the day, we used to have a little bit of comedy relief. We used to joke around about things, right? It's just life. You need to kind of joke around about things. And one of the things that I joke around about is, if you see people doing victory laps, right, that it's BS, right? This market has been very difficult on the long side or on the short side. We haven't gone anywhere in 2 months, right? So this was the tweet that I put out earlier, right? Here's the chart of the S&P in the last 2 months. Right. This is difficult. We've been in a range. Right. And again, like I try to be as upfront as possible with everybody who's experiencing this market. The main thing is to hang in there. Right. Longs, shorts, whatever you're doing. right? This has not been an easy market to trade, right? You could try to convince people otherwise. Clearly we're just looking at the overall market. We're not looking at individual names where there's been more opportunities, but overall we haven't gone anywhere in 2 months, right? That's a very difficult, the very difficult market to trade. I was listening to an interview that was done by Trader Lion over the weekend. It was an older interview, it was by Larry Williams. And one of the things that he was saying, one of the points, and I listened to when people like this speak, they know the market, and they said that one of the number one ways to make money in the market is when it trends. When you don't have a market that trends, it's extremely difficult, right? Trying to time. And again, the reason why I'm just going through this is just so that you understand, right? Trying to time every turn in the market is in the short term is extremely difficult. All right. So again, take a deep breath with what you're experiencing with this market, right? I talked about, a couple of these recent videos that I've put out. I've talked about having reasonable expectations, right? If we continue to kind of do this very sloppy market, I call it slopping around, right? That's the term I was using, it's a very technical term I was using today, right? Keep your goals realistic. Right. My goal for this month is probably to return about 5 to 10%. Right. Maybe that might be a little bit ambitious, considering the price action. Where am I now? I'm up about 2.5% for the month. Right. I was down today. I made some mistakes. I did not trade well. I didn't follow my trading plan. Every day you should think about how you're going to trade this market. One of the things that we've been talking about in the trading room was like, hey, don't feel bad to go play golf. Don't feel bad to go to the beach on days like this. I decided to kind of see if I can day trade this market a little bit. 2 trades I put on did not work today. So I gave back some of my profits from last week and the week prior. So that's shame on me. But I go over this in the room so that you understand, like, hey, the more that you trade when you don't need to, you're going to give back some of your profits sometimes, especially when you're dealing with a market like this. And here's my trades, right? So I do this every day. I sent somebody my trades, who was asking if I was still in a trade yesterday, and I showed them that I got out for profits. This was something, all of these names got hit really hard. They all look the same. I sent out a tweet today saying, hey, I was looking at the cyber group, right? So I took a couple beginning, starter positions, in the beginning of the day, and these names all got crushed. All right. So you just have to do a lot of reassessing with this market, right? Look at what happened to Service now, right? A few of these names, look like they had the ability to, I think they're just talking about this on CNBC, which I missed this yesterday, by the way. But if you look at all the cyber names, right, this spilled over, right where they kind of needed to turn the corner, which is not a great sign. Right, ZS down 7%. MDB, which is what I try to trade today, right, wrong. Now again, it didn't break support, but I'm looking to kind of break this. The whole trade is a technical trade for a move out of this trend line. So that failed, right? And if you go down the line, one name I thought was particularly interesting too, which I thought had a chance at turning and maybe doing something different, because to start the week, it was above the 50-day moving average, is Microsoft. Microsoft got hit pretty hard today, down 4%, right? It didn't, it hasn't broken the value area, but, this is where we need to see things kind of reassert themselves, right? When they're starting to retest, right, that area of whether or not they're going to make a higher low or a lower low, right? Sorry, yeah. Or no, a higher low. Let me say that again, a higher low or a lower high. So again, this looks like another lower high, right? And that just means as we get to these points, right, where the trend could possibly change, we're continuing to see, unfortunately, the trend go back down again. So, we haven't taken out the lows, as I mentioned with the S&P, right? As I mentioned with the S&P, is we haven't gone anywhere in 2 months. So, you can't really make too much of a conclusion on that. I don't think that you could get super bearish. I don't think that you could get super bullish, because we just haven't gone anywhere. Now, if we break the lows, and you go back to, we could look at the NASDAQ a little bit too, but if we break the 1 hour value area, that would be a sign that the direction is starting to change back down. But for now, inside value is just chop. right? And that's the same thing with the S&P chart that I showed you. And of course, this is my chart to watch, which I'll end here, which I just sent out an article about this. But the week isn't over, right? I mean, we've got all this data that's coming out. Let's see if this changes, right? And that would be, a reversal of what we're seeing so far the first 2 days of this week, and then move into the valuary. So I haven't, it's not a closing bar, it's a developing bar. So I'm holding out for that. And if that doesn't happen, right, if we don't push inside the valuary for this week, right, then you just kind of have to be patient, right? We're also going to get a lot more things like this in earnings, like ServiceNow said last night. We're going to get a lot more of these things. We're just starting earnings season. So, it's the time to really, be mindful that there may be some more landmines like that out there with this economy. And basically what the NFIB survey said this morning, right? It's one of the lowest times of business optimism right now, right? How is that going to translate into earnings, right? Probably not such a good thing. Here's the chart going back, here's the max. We'll go all the way back here, right? Look at how bad small business optimism is. Now, obviously, Microsoft and some of those companies, those are large businesses, right? But it should carry through. Obviously, if small businesses are very unconfident, not optimistic, right? What is that going to tell you about some of the earnings reports that we're going to see? All right. So buckle up, manage your risk, manage your trades well. Another thing that I wanted to say just finally in this video is that, right, in order to put in, a positive, positive performance, and grind it out, right, there's also a lot of trade management. You cannot just put on trades and let them ride, right? And that's also a key, and that's what we talk a lot about at Tribeca Trade Group. All right, guys, have a great night. See you tomorrow.